Fed starts their two-day meeting today with their announcement on the next rate hike tomorrow. Here's what you need to know before the bell. Yesterday, the markets ended right where they started as well. Everybody's just kind of anxiously awaiting what the Fed is going to say or do next. This is going to be the big issue, right? At the moment, Fed fund futures are predicting a 25 basis point rate hike tomorrow, but that's not really the issue here at hand for the markets. And really what will move the markets next is going to be what the Fed says, right? If we take a look at the recent inflation data in the GDP report, that PCE deflator, that number has not come down a lot. And if you take a look at the trimmed mean PCE, which is really kind of what the Fed looks at very closely, that is also not coming down very quickly. Of course, that suggests that the Fed can't cut rates here, at least not yet. And with no real crisis at hand, there's no reason for them to cut rates. But there's also the issue of that if inflation starts to reignite, and we are seeing some evidence of that in things like producer prices in some areas are starting to tick back up. If we start to see a resurgence of inflation, that's going to suggest the Fed needs to continue hiking rates even more. That is something the markets are really not prepared for at this point. But nonetheless, markets are trading at the February high. So we've gone basically nowhere since February. Markets have been trading in a very nice consolidation pattern this year. We're up about 8%. Certainly no signs of current stress in the markets despite bank failures, higher interest rates, and economic weakness. Markets continue to stay on a bullish track. Moving averages remain all clustered right around 4,000 or so, but the big number is the 20-day moving average, which continues to provide rising support for the markets. The markets have continued to really run along that 20-day moving average ever since the March lows. This rally is very extended here. Again, we've had a very long advance in the markets. Our MACD buy indicators continue to be elevated, and markets are a little bit overbought on a short-term basis. So again, a bit of a corrective action over the next month or so will certainly not be surprising. That would give us a better opportunity to put some more capital to work. But over the next day or so, all eyes are really going to be focused on what the Fed says. Tomorrow, that announcement will be around 2 o'clock, of course, the Fed press after that. That conference is where Jerome Powell will utter his words about being hawkish or dovish, and that's really what the markets are going to cling to. So expect some volatility here. We've also got an employment report on Friday. This market could be all over the place by then. So again, we continue to suggest using this rally and where markets are right now, rebalance risk in the portfolios, raise a little bit of cash. Once we kind of get through this data period this week, we'll have a better idea of where markets are headed to next. I'm your host, Lance Roberts, and that's what you need to know before the bell.